So Garth, I think for me, one of the things that I've always been fascinated talking with you about is kind of what are the major investing trends globally? And particularly, as a family office, you get to deal with some of the wealthiest people from around the world, and you get the best advice from all over the world. What are the big trends that you're seeing that we investors should be thinking about? And I know you and Anthony are pivoting, so if you don't mind, I'm going to ask you, and if you need to ask him, then you just fire away.
Yeah, thanks, Scott. I don't think I'm going to be as fast-spoken as Judd. I'll probably be a lot slower and calmer like a South African, the good old American way. I do enjoy the energy. It was fantastic. Look, the major trends, I think you alluded to it about the new age and the old way and the control. I think the symbiotic investing and a lot of the family office joining forces to buy assets outright. Typically people have moved away from the institutional and the stock standard market investing, capital markets. And the trends with the big high net worths is to be involved directly in that action and to be involved directly in the asset. And by being involved, seeking the expertise of the family office partners, with Kalia, for example, like Peter Katz, one of our partners, the importance of having expertise in that partner and tried and tested. And when you look at wealth, I mean, we've had, great wealth created in the industrial revolutions. We've had great wealth created in the digital era. But I think if you look at land ownership, it's always been a consistent asset class, and property by its nature, a very consistent asset class to protect and create wealth. So in a family office, we're seeing a lot of move back towards property and diversification of global property. And talking specifically to America versus Europe, there's a lot of talk about America losing the power that it's had, and I don't buy that. And I do agree with Judd on many, many aspects. So I think people's diversification is largely focused around where assets are cheap and the fallout from the interest rate and inflation cycle. So excellent partners like Peter, like the Judds that you've got here, being able to identify those distressed assets and to rejig those assets is a very, very strong focus. We're also coming out of, a period where we've had geopolitical tensions and we've had considerable, negativity in the markets. I mean, even though 2023 rebounded considerably, I still think, people have been very nervous coming into this year. So people are starting to take a hard look at it, and we've got incredible optimism in the market, and it's not that end of the bull run optimism. This is real optimism fueled by the cycles that we're facing and the inevitable decreasing of interest rates. That decreasing of interest rates and that optimism, in my view, is where we're going to see the dollar strength coming off, and why we're looking specifically not just at the USA, which is typically your biggest property player. Why we're particularly fond of the European space, and particularly Germany and the euro-based incomes and IRRs, the growth that we can get on these assets, is attributed to the fact that safe haven dollar and the strength of the dollar being above its average strength. So even an equalization of the dollar back to an expensive or even a midline, people are looking to the other currencies to diversify their assets. So if you look at a European asset increasing from 5 to, let's say, 7% in the next year or 2 or 3 years, as an income from a European asset, a euro-based asset, or a sterling asset, that is effectively an increasing yield against what could be a decreasing currency in the dollar. So that's why I'm a big fan of the European incomes generated from properties and the IRR on that. I think America's had a strong run, particularly the two asset classes alluded to there, not so much the industrial, but the multifamily. I think that in the US is constricted quite heavily. And I think the retail space in Europe is stronger than the retail space in the USA. So I'm a big fan, and having just come back from London, you know, it's good to see the cranes swinging and the properties moving again, which was a little quiet over the last few years. So yeah, that's the trend. Family offices, and in particularly the high net worth, grouping together to own the assets outright and to use the expertise of partners, and moving towards property as a key anchor in their diversification strategies. You know, Anthony can talk more to the listed market, the tech space, the Magnificent Seven now, the Magnificent Six, and the earnings there, which obviously we remain focused on. But yeah, in a nutshell, I think that's the dominant theme across family offices.